Welcome to Cocktail and Commodities. Joining me today is private speculator, also CEO of Rule Investment Media, Rick Rule. How are you today?
I'm fine, Shae. The better to be on air with you.
Now, I'm thrilled you can join me in our chat for our initial conversation kicking off our cocktails and commodities. Now, unfortunately, due to a technical glitch on my end, we have lost 9 minutes, but nonetheless, I know we're going to make this a very exciting chat. First and foremost, Rick, I want to draw attention to a comment that you made in late 2002. And it's about gold. Now, somewhere on the internet, I found a quote where you said that gold was going to be the play for 2023. Now, you made this at the end of 2022. Tell me, are you feeling a little smug right now?
No, it's kind of you to play one of my comments that worked out. I've had plenty on both sides. But, I'll stand by that comment. It seemed to me to be propitious in terms of timing because in my experience, I've noticed that gold does well when people are concerned about the maintenance of purchasing power in other instruments. And there's nothing in the world like a negative real interest rate, which guarantees that you lose purchasing power to make you nervous about said purchasing power. And I don't see very many ways out for the big thinkers. It's difficult for me to understand the return to supremacy by fiat investments unless they somehow manage to tame inflation while simultaneously raising the interest rate. And I see that as an interesting challenge for them, and one that, quite frankly, they're not up to.
What does this mean for gold explorers? Because they will, no matter how hard this gold price is running, gold explorers, particularly here in Australia, their share price just can't get a leg up. One of my absolute favourite gold explorers in Australia, who I will not name for fear of the wrath of our regulator, their share price has basically gone back down to where it was 4 years ago. So even though this is a great company, why is it that great companies who are exploring for gold, they've got great management teams, they've got great assets, there's others, plenty others like this that cannot get their share price to run in this market, even when gold is rising. Now, you've done this numerous times in your career. Why are these gold explorers lagging so far behind? And is there a genuine opportunity for investors in gold explorers right now?
Let's answer the questions in reverse order. The second question, is there a great opportunity? Yeah, absolutely. And we'll explain that in answering the first question. Why? That question, why, goes to the fact that if you merged every junior mining company in the world, Australian listed, Canadian listed, British listed, US listed, that company, let's call it lame, halt, and blind, or maybe we'll call it the good, the bad, and the ugly. That's better. Yeah, let's call it good, bad, and ugly. That company would lose about $2 billion a year. Expenditures net of realizations in a good year, and they lose $4 or $5 billion in a bad year. Investors are asking themselves rightly how much money they ought to pay for the right to lose $2 billion a year, and the answer to that is not much. That hides the fact, of course, that maybe 15% of the issuers are of such high quality and deliver so much value that they add legitimacy and occasionally even luster to a sector that loses $2 billion a year. Investors who aren't good at segregating the good from the bad from the ugly tar the whole sector with the sins of the majority of the sector. And so the industry as a whole is suffering, both because investors and investment banks aren't discriminating, and because most of the sector, not all of the sector, but most of the sector is junk. The second reason is that gold bull markets mostly follow a predictable path, which is to say that the market itself is led by the commodity. And the first responder after the commodity is the largest, finest, and most liquid gold companies, which attract both risk-averse gold investors and fresh money. And what happens is that when the share prices of the biggest companies rise enough relative to the second tier, either the second tier prices go up or the bigger companies take them over. Witness Newmont, Newcrest. And that descent in quality takes place through the whole of the bull market. So the circumstance that you describe, which is the ultimate increase in the shares of the juniors, is absolutely a necessary consequence of the increase in the gold price and the increase of the share prices of the majors, provided that you concentrate on your higher quality juniors. The lower quality juniors, of course, aren't going to be taken over by anybody. But the second thing that you have to look at, Shae, and people are missing this, the other way that you kick off a junior gold market bull market is discovery. And discovery takes a long time and a lot of money. Most investors put up whatever they put up into a company, and they expect to see good exploration results in 3 months or 6 months or 9 months. But district scale exploration takes a decade. They began working on the Carlin Trend in the United States in the mid-'70s, and they began pulling out great big discoveries in the mid-'80s. The point of all this is that the money that was raised in last cycle and was put to work is beginning to generate discoveries now. Witness the Chalice discovery in Australia. And this combination, which is to say mergers and acquisition, coming down the scale, B2 is an example, taking over Sabina in Canada, and the new exploration discoveries that we've seen will, I think, begin to satisfy even some of your greediest listeners, with the caveat that they need to confine their speculations to the type of company that you've described. People with experienced leadership, people as managers who own a lot of stock, who aren't relying just on salary for their remuneration, people with good projects, and people with good levels of exploration and project expenditure relative to general and administrative expenditures. To the extent that people confine the universe of juniors that they have to that type of company, I suspect that the next 5 years are going to be very good years indeed.
I'm going to let everybody listening know that they need to rewind the last 60 seconds of what Rick just said and consider that your ultimate cheat sheet when it comes to investing in explorers. Because you and I have had this conversation over the years. If you use those as the boxes that you're ticking when it comes to looking for exploration companies, your chances of success increase. They're not guaranteed, but they do increase.
And a commercial, Shae, if you go to Rule Classroom at YouTube, I'm doing a 60-part series on how to evaluate and analyze natural resource investing. It's free. The first 10 sessions are already posted. So if you want to take that four-question test list and learn how to apply it, I'm giving you the benefit, if that's what it is, of 49 years of experience for free at Rule Classroom.
Rick, you're going to put analysts like me out of a job. We will make sure we provide that web link to the Rule Classroom in the description box of this podcast. So do make sure you go there and look at it. Now, I want to move on. I'm fresh from, conference season has begun in Australia, and conference season will extend. My conference season will extend to attending the Rule Investment Symposium in Boca in the next couple of months. Now, one thing that struck me this year at a conference I was just at compared to last year is lithium. Now, lithium was exciting last year, but the sheer number of companies touting their lithium and dangling it in front of the shareholders or the would-be investors was enormous. And if they didn't have lithium, there were banners just saying green metals are the future. Rick, while I do love a good lithium company, tell me, are we reaching peak lithium fatigue, or is this only the start and maybe I'm being too dismissive of it?
I think lithium will continue to be a good as opposed to a great business. I grew up in the oil and gas business and later moved to geothermal. In both of those industries, lithium is regarded as waste. It's scale. The world is not undersupplied with raw lithium. The world is undersupplied with processing capacity around lithium. I would say that the good news in lithium has been the absolutely idiotic response of the government of Chile to increase lithium prices. A government that couldn't spell lithium 6 years ago has decided to nationalize the lithium industry as a consequence of higher lithium prices. Now, we've seen government-run mining companies and oil and gas companies before. The track record of governments in commodity production is virtually unblemished by success. If you look at Petro-Canada wrecking Canada's oil and gas industry, or Chile itself with Codelco, the most inefficient big copper company in the world, or ZCCM, or Jacobin, the idea that the nation of Chile, the biggest, second biggest now, and lowest cost lithium producer in the world, is going to have their lithium industry run by the post office, is nothing if not bullish, ultimately, for the lithium business. In the nearer term, there will be a lot of lithium discoveries because we're looking for it. And you will notice that markets work. The price of lithium is going down while the number of listings is going up because it was easy to raise money for lithium last year. That's what you expect. The lame, the halt, and the blind in the speculative community and in the government's community are always attracted to a story after the price rise has justified the narrative, but after the value has already been extracted from the sector. The money in the near term in lithium is going to be made by people who are bringing new process facilities online, because that's where we're short of capacity. The second to the last annual report of SQM, the second or third largest lithium producer in the world, suggested that their current reserves and resources were the equivalent of 80 years' demand. So they clearly didn't have a supply issue with regards to lithium. What they didn't see is a market for the product increasing so quickly that there was a bottleneck around processing. Make no mistake, too, as an Australian, the idiocy of the Chilean government augurs well for Australia. Supply disruptions or the threat of supply disruptions from Chile will make the boom in a sensible jurisdiction, say Western Australia, much more attractive to capital, and much more attractive to capital that will come in from lithium-consuming nations, trusting Australia more than Chile, perhaps damning Australia by faint praise. But I think lithium is an interesting industry. I'm usually not interested in a commodity where the price has increased by 300% in 5 years. And I'm usually not interested in industries where the number of listings in 5 years has increased 6 or 7-fold. And so that extends to lithium. But there will come a time when the lithium boom turns into a lithium bust. And where companies who have done a good job with the money that they've raised are selling at half net asset value. And at that point in time, believe me, Shae, I'll be back.
You actually raise an excellent point there of Australia being an emergent source of lithium to rival other countries around the world. Now, given that there is legislation coming out of the US, which is the Inflation Reduction Act, which we've talked about in the past, and the EU Critical Minerals Act, that's actually not its name, but that's essentially what it is, which favours nearshoring or friendshoring. So for countries that are able to produce lithium within the Western Bloc, do you think that they are going to, that even sub-economic lithium deposits are likely to be favoured by governments?
Yes, I do. Governments are that stupid. Governments exist to transfer wealth and destroy it. And yes, I do. I think that inefficient producers and uneconomic deposits that are politically correct will be favored to the detriment of consumers, shareholders, and taxpayers. But yes, I think that's going to occur.
Moving from a battery metal to probably the most unloved source of energy. Now, Rick, uranium can't catch a bid. Look, occasionally it does do well, and in spite of its benefits when it comes to an alternative form of energy in the globe, it's still really struggling to get some mainstream traction as well as political support. Now, you have been a uranium bull for a considerable period of time. Tell me, have you changed your views, or do you think now with decarbonisation being the main topic, and even though we're looking at renewables, and we might have to have a discussion about the benefits of renewables another time, even though most of the Western world is moving to renewables over a better source of fuel, do you see uranium being able to get some traction and actually make some meaningful inroads with governments, legislations, and also the price to be a genuine form of energy down the line?
Yes, 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 and yes. Those were a lot of questions. I
There was a lot
believe
there, actually.
I believe that we're in a uranium bull market now. Perhaps a stealth bull market, but a bull market nonetheless. I think that the uranium stocks are down simply because they tripled in 2020, and rational expectations have returned to the market, which is to say markets work. And the junior uranium stocks, when you and I used to talk to each other in 2020, as we discussed at the time, were farcically priced. The air has been let out of that. But in terms of public opinion, let's look at a few things. The co-founder of Greenpeace has said that our only hope of reducing carbon loadings is uranium. Very seldom do I find myself on the same side of the table as Greenpeace. Public opinion in Japan, the home of Fukushima, has switched from 21 or 22% of the population being in favor of resumption of nuclear power generation to 63% of the population favoring same. The avowed enemy of U.S. economic progress, which is to say our president, Mr. Biden, has gone so far in his idiocy that he's looking to subsidize the domestic uranium industry. Now, that's alarming to me indeed. But I have to say that we aren't coming to a uranium bull market. We're in a uranium bull market. People look at the spot price of uranium, which is only up from $50 to $54, without understanding that right now only about 25% of the transactions that take place in the uranium market take place in the spot market. The rest are taking place in the term market. And the term market now is substantially higher than the spot market. I suggest to you that in the second half of 2023, that the majority of uranium prints in the world will take place over $60 a pound U.S. in the term market, up from 3 years ago, $20 a pound, 4 years ago, $20 a pound. Now, the move from $20 a pound to $60 a pound feels to me like a bull market. I don't know what it feels like to other people. But I need to say, too, that the fact that the uranium price has preceded the price of the better uranium equities, just the way the price of gold has preceded the share price of the better junior gold equities, to me is always a good thing. If I have the ability to speculate on an outcome that I see as being inevitable at a lower price rather than a higher price, I think that's a good thing. You and I have talked before, Shae, about the appearance of a bear market being described as bad, when what a bear market really is a sale. When people go to buy consumer goods, they think the cheap is better. And when people go to buy financial goods, they want to overpay. That, of course, precludes their ability to take advantage of sales on physical goods. But people really need to investigate their psyches with regards to that. I'm delighted to see the price of uranium move up. And I'm delighted to see the shares of uranium companies not move up. You make money by buying low and selling high. And the continuation of reasonable prices in uranium equities gives people the opportunity, if they choose to take advantage of it, to do just that.
Rick, our time is rapidly drawing to a close. Now, first of all, this podcast is called Cocktails and Commodities for a reason. Now, I will be at your conference in July, the Rural Investment Symposium in Boca Raton. Am I saying that correctly?
You are.
Raton? Okay, wonderful. Now, tell me, when I come up to your bar, and I do know you factored the Aussie Premium in there, what cocktail will I be having on behalf of you?
Young red-headed correspondent may have any cocktail that she wants.
All right. Now, obviously,
or if she's Australian, she may have three. All joking aside, I'm delighted that you should come to Boca Raton. I hope many of your listeners will join us. For those who can't, we're going to live stream it, so you can watch the conference at home. And you'll be able to watch the conference whether you attended it live or at home for 6 months after the conference is over. We're going to give you 48 hours of programming. And if you combine that with cocktails, it's unlikely that you're going to get everything that we have to offer live, so you'll have to review it. I need to say, too, that these are very good investment conferences. We have some of the best big picture thinkers in the world, the Jim Rickards and the Bill Bonners and the Grant Williams of the world. We have great, great, great analysts. We've been doing this for 30 years. We've got a pretty good Rolodex. We have a group of people we call the living legends who have built multi-billion-dollar mining companies from scratch. And best of all, if you don't think I gave you your money's worth, email me. I'll give you your money back.
For everybody who is always, I've actually spoken to a couple of investors over the years that have said your conference is on their bucket wish list. So if there is anybody who is thinking about it, absolutely tag along or join us online. Now, Rick, I do know you've got to run off, but before we go, not only do you offer free investment courses online, you also offer free portfolio rankings. Tell me, how can people take advantage of this?
Any of your listeners who like what I have to say about resources and want to make it personalized can go to ruleinvestmentmedia.com. List your natural resource stocks. Please no pot stocks, please no crypto, please no tech stocks, just resources. I'll rank them 1 to 10, 1 being best, 10 being worst. And I will offer a comment on individual issues if I think my comments have any value. That's ruleinvestmentmedia.com.
All right, Rick, I know you've got somewhere else to be. I'm very grateful for your time today. Thanks for being here.
Thank you, ma'am. I look forward to discussing cocktails and commodities in Boca Raton with you.